Okay, so really important that everybody reads through this risk disclaimer because it's just if you push the button, you're assuming that risk on your own. I'm not a financial advisor, so I can't give you financial advice. I'm always going to preach to you on that. So just read through this and just remember that when you push the button, you can lose real money. So pause the video, look at this, and I'm going to take it away. And it will also be in the description below before the video is posted. So we are going to cover a lot of things here. So I'm going to go over DoorDash here, and then I'm going to talk about Amazon as well. Okay, so this is how I break it down and how I anticipate price and what I use to call targets. So the first thing you saw right here, I'm actually gonna change this out to something different. I don't like how clean that looks. We're getting this imbalance written out. So this is the fair value gap / imbalance that we're looking at here. We got this right here, so we have buy side right here, short-term high, buy stops are above that. This is for your notes. If you're not experienced, you should be drawing these things out, because I did the same things when I started and it really helped me out. But eventually you're going to get on that level where it's going to be a bit of a distraction. So the target is up above this high, and that is not even close to what I'm expecting with this price delivery. This is just a weekly time frame. So we're going to take our little light bulb tool here. So 2 times we've had a short-term high taken out. That. I'm supposed to clone it. Let's clone it. Let's do this. So we have a market. Bear with me. I strive for perfection on this, so it bothers me that this isn't going straight and cooperating with me. Come on. This thing is being particular. There we go. Alright. So, 2 times we've had a change in the state of delivery of price. So, right here, when we pop through this short-term high, we pop through this one. So that to me tells me that we are seeking higher prices. So my attention is more so on this short-term high being taken out, because, well, look what we left here. Like, we left multiple gaps, so fair value gaps right here, and we have that one right here, and then we also have a lower one, so the idea is to pay attention to the lower one. This is probably going to seek that deeper discount. Obviously, if you were to go back in time, you would anticipate this happening, but right now, that's just old data that you need to study and just look at. And then we also have this right here, short-term high. So we have that shift above this one, this one, this one. So we have a lot of bullishness coming into this market. I want to take this to the monthly. And another thing I want you to notice about this company, or just like any company in general that trades on like the NASDAQ or the S&P, is it's super liquid. So when you get an IPO company like this, you'll notice a couple of things. So it opens up at IPO price, comes back up, takes out the short-term high, the highest price it's ever been, and then drops into a really deep discount. So that, to me, if you study PE ratios and do some research on Larry Williams' work, you understand that IPO prices have a high PE ratio, so you can expect this down movement. So shorting an IPO stock, in my opinion, I think is probably more likely to pan out. In my opinion, I don't utilize that. I'm not going to teach that because I probably may not know what I'm talking about, but that's just something I've noticed. So when you come up here, I'm looking in this area right here. So we have this up close candle. Draw that out in time. Monthly order block. That's what you're going to call that. And what I'm expecting, since this is all balanced, and you can't see it because this is drawn over, but you can see how it's got that really long wick, and then this is all balanced. So it's going to blow right through this. Obviously, the company needs to show profitability, but ultimately, this company, in my opinion, is proving itself to be profitable. So I believe this company could reach up into the 130 to 140 range in this imbalance right here. I'm going to take a rectangle tool, or oops, I'm going to draw this right here. So long term, I would say this monthly candle is going to hit its old, it's going to hit an old PD array. So what's the most obvious to me is you take your Fibonacci tool. And I know I seem like I'm moving fast, but if you study a lot, you're going to understand why. So up here, 0.5 level, half of this wick, CE of the wick, that's where I'm expecting this monthly candle to expand to, and at least take out the short-term high. That's my expectations for this particular asset, and then the next monthly candle I expect to reach up and take this short-term high. So that's really fast in my opinion, but in the next 3 months I think we could seek up into the wick of this candle, like the halfway point of it. And then another month in, so we're talking 4 months, we could hit the main threshold of this order block. And then after that, halfway of this wick, and then up in here. So we're thinking, well, I'm thinking, in my opinion, we could possibly get up into here by winter, up into this gap. So we're talking 67 to the one, like if you take the middle here of this wick in here to this wick where it's balanced completely, so 134.60, that's what I think in the next 6 months could be a reasonable target to achieve. So I'm going to just leave it at that. That's just what I think. And then I'm going to move on to the next one. Apple is another one. It's going to rip right through this. Probably seek higher prices. I honestly think that this stock is, it's just reaching positive territory, and I'm not interested in that anymore. I've been watching this from right down in here. I've been kind of watching it right down in here. I didn't really buy it. I was kind of just watching it to see what it was doing. It's built up all these stops up here. So it's finally working its way up there. And it didn't really take long, but Apple's a really profitable company, so I'm not surprised by that. Amazon is one of my favorite ones. So I'm going to cover this one in the same detail. So got the same thing going on here. There's a shift in market structure. The 2022 model. Get your fair value gap. Obviously it doesn't look as nifty and perfect as the NASDAQ and the S&P and the Dow, because they're more liquid assets. Like, this isn't trading. You can't trade Amazon after the market closes. You can buy shares, but after a certain time, Amazon is it's just not being traded. The futures market is. So these gaps that you see is just like, that's just how it works. It's just people. I don't know who's doing it. Central bank is probably just buying up Amazon, and that's why it's gapping up. It's just not something you can trade 24/7. You can't trade anything 24/7. Probably shouldn't have said 24/7, but you can trade the S&P from Sunday to 5 p.m., which I don't advise trading Sunday or Monday, in my opinion. You can do it. It's just, I just don't care for it. You need to take a break sometimes. And then you can trade all the way till Friday at 4 p.m. and then the futures market closes. You can trade stocks till I think 5 p.m. I believe, but I'm not going to comment on that because I don't know how long, and I don't really particularly care to do that. I would just rather come in and get what I want out of it and be done and enjoy the rest of my day. So this gap right here, as you can see, we came in there and obviously we've accelerated to the upside pretty nicely. I like to put this on a monthly time frame because it really gives a good quality picture of what price is heading. So long term, I know that it's very likely that we're going to hit a new highs. Like, this company is going to gain a new equity high in value, like it's going to increase the value of its company, because Amazon is doing an incredible job. You know, in my opinion, I think Amazon is a great company. So what I see right here is something that I really like. So we have our volume imbalance. Here I'm just going to use a trend line tool. See how it poked up in there a little bit on Friday, and then it just kind of hold on back. Obviously, because it's trying to reach a discount. So it's going to probably trade down into these down close candles, and then accelerate up to this volume imbalance, and then eventually taking out old highs. So we're definitely going to have our attention up here, the short-term high. And then you'll go to the monthly time frame again, and I want to mark off this imbalance. I'm just going to leave it like that. I'm not sure if that's the correct way to draw it, but it's not the end of the world. It's more of noticing the volume imbalance right here. Like, that's more important to me. And then obviously, if we have went through the mean threshold of this up close candle, obviously if you cut this in half, you can tell it's went through. So I'm thinking that we're going to go up into this one as your order block here. These up close candles are your order block. But my attention goes right up to the very open of this candle. And then obviously you would take a fib. I know it doesn't sound obvious. I probably shouldn't say that. But you would take your Fibonacci tool, and you see that 0.5 level, that's your mean threshold. So 157.87. Draw that out in time. Get rid of this Fib tool because it's really distracting. And you just simply draw out MT, which stands for mean threshold. And you just watch. Just watch to see if it pans out. You don't have to trade it. Just look and observe. And you keep these here and you just keep drawing them. and then you journal that out and annotate it in your head, and you just take a simple screenshot, and there you go. You can take credit. You don't have to be in the move. You can just understand that you were able to anticipate that before it happened. So I personally don't think that Amazon is going to come back down into this gap right here. I think this monthly imbalance is going to stay open because we've already went and passed through these down close candles and rebalanced this. So the CIBI is rebalanced. So there's no need for it to come back down here. Its focus is right in here. It needs to get up and above this volume imbalance and this slight imbalance that we have here, and create an inversion fair value gap that has been discussed several times. If you don't know what I'm talking about, go to Inner Circle Trader YouTube channel and you'll figure it out. That's just the best way to guide you. So once we get above this, we're going to come back down, and I'm looking to see if it'll find some support here, and then we can watch to see if it'll take out this high, and then eventually we'll reach up into these highs. Next we got the E-meeting S&P, my favorite as always. I would never leave it hanging. I will always trade this. I love this asset class. My favorite. It's very precise, and I couldn't live without it. So I had mentioned, like over a month ago, I believe, that I expected these relatively equal highs, and I showed that I don't even want to use this. This is June delivery contract, so we're going to go to load. So September delivery contract, because we're in a new contract month. I think we are. I forget if it's expiring, but I'm already in the September contract. I think there was like a week afterwards, then it's done, and then you just switch over to the new month. So ultimately, we were a month ago. Was it June? Okay, so I believe a little bit over a month ago, probably right around here. I don't remember exactly. I have to go back and watch the video, but I do believe we're somewhere around here, and I was talking about this breaker. I'm not 100% certain on it. I have to go back and watch the video, but I just know that I've seen this. So we have our breaker right here. These last up close candles, low, high, lower low, up close candles. Draw them up in time, and there you go. There's your breaker. I think personally, I was looking down in here, and then I was waiting for that shift. I was waiting for the delivery state to change, and that was way down in here. So I was waiting for that short-term high to be taken out, and then you can get in there and start holding that long position. And I showed the bar replay tool, and that's the only time I'm showing it. I'm never showing that again because it's just a way to flex, in my opinion, that you're able to show that you're making money, and then people fall for it, and then they realize that it's not that easy, and then yeah, they get kind of disappointed. So I'm not interested in showing you that. I'm more interested in showing you the delivery of price before it happens, not after, but before. So as you can see here, we have most certainly taken out these relatively equal highs, and we're moving on to the next step. And the Six Sister idea, in my opinion, is really unique in this sort of situation, because as you notice, the NASDAQ on your right side of your chart, or on the right side of my layout here, so on the right side, right here where my mouse is at, right here you see that short-term high, and you look at the S&P on the left, you can see the cursor is on the same high. Don't take my word for it, just go back and look, and you will see it. So as you can see, the NASDAQ has in fact taken out that short-term high. And if you look at the Dow, it just increases the confidence that it's probably likely to go up and take out that short-term high. So I want to, excuse me, I want to get the continuous chart up here. That way you can actually see. But right now I'm just using this because we're having all this like these voids that need to be filled in on this contract, and obviously when we move into a new contract month, we need to consider old areas where there's voids because they need to be filled in. So even the S&P long term, in my opinion, 4,400 big figure is going to get hit rather soon here. I think next week or the week after we could see that pan out, but obviously we have to wait and see what happens. So we have the weekly chart of the continuous, or this isn't it actually. Oops. So yes, right here, continuous chart. I drew a little bull flag here. Let me delete that, or a bear flag, just because I was being funny. Delete that crap out of there. I never want to see that stuff again. Let's use this from here. So we'll take our buy side right here. So this is your buy side. I'm not going to write it down. That's your buy side above the short-term high. And then we're going to move on to the next step, which is drawing out that fair value gap right here. So in between these candles, halfway point. Draw that out in time. Simply just take a Fibonacci tool. Snap it there. So the one thing I like about TradingView is it snaps right to it. It's probably one of my favorite platforms to use because the magnetic snap-on tool makes it really accurate. And then you take your simple trendline tool and you find your levels. So 4315.50 is halfway between this candle, this candle's high, and this candle's low right here. That is your inefficiency. That's your CIBI. So we're looking for a price to reach up into there, and we're going to simply just do a nice, I'm going to use a nice thick line. So consequent approach. That's what you're going to be looking at long term for now. At least that's what I'm looking at. And I am drawing your attention there because that's where my attention is at. And we're getting really, really close to hitting the short-term high and taking that out and getting up in here. And that's the part where we reach up into these up close candles, and then we seek more buy side to be taken. I do think that overall the S&P long term is going to be moving to higher prices, and then once we get into the elections, then that's where I think things are going to be a little bit very indecisive, very hard to navigate. It's going to be really hard for it to hit all-time highs. It's just going to be super hard for people that don't have experience to navigate through it. So I praise caution when we get there, but for now I think everything will be fine. It's just once we get to that level, that's where you're just going to have to be really careful. So draw your eyes right here and just keep track of price and just study as you go. And I think that you should find value in what you're seeing, and I do hope that you found value in this. If you found it insightful and helpful, just click that like button below because I want to know that I'm helping you. I don't want you to come here and just be like, I'm still confused. I don't know what you're talking about, because I will explain it in more detail. It's just I'm so used to it and I'm so familiar with it that I don't need to really draw all this stuff anymore. Do I have annotations in my own personal book that I've written? Yeah, I'm not selling it. It's just a journal. It's just a printout. So that way my head is aware of what's going on, versus not doing anything and just being completely confused and stressed the heck out that I got this figured out. So, ultimately speaking, E-mini S&P, I think, is likely to reach up into here. And then long term, I think we're going to reach up and back into those old all-time highs that we've had, because they're stops up above the marketplace. And I can show you the NASDAQ too as well, because I think that the NASDAQ really is just has beautiful equal highs above all-time highs. And I see the accumulation down in here in the October lows here, which is not random. October tends to create a lot of long-term lows in the marketplace. So we got these highs that are relatively equal. You can see it's marching its way up there. And then we also have this inefficiency here in the form of a SIBI. So I would pay attention to that right here, this gap. We don't have much of a gap here anymore. It's filling that in. You'll want to see if that treats that as an inversion level and reaches right through it. Dow futures, sloppy, garbage. I hate it. Not a fan of it. Never will be. But if you look really closely on this chart, ignore all the annotations here because they're old, but they are important for your studies. But if you look really closely, see right here, what are those? Relatively equal highs. Do you see any fair value gaps in here above these relatively equal highs? Because I do. See one right there, right here. Really small, but if you pay attention, look really closely, you're gonna see it. Right there, there's your SIBI. So since my candles are red, I like to just keep it as a red rectangle. Makes it easier to see, in my opinion. Doesn't really matter to me what color you use. That's just what I like to see when it comes to those things. And then with the green close ones, I like to take and draw the bissies like this. And there is your bissie. There's your short-term high taken out. 2022 model. Fair value gap. Lots of opportunities, even long-term, to get in the Dow. Especially right here. Monthly or weekly levels, we have that short-term shift in market structure. But this is a weekly time frame, so long-term, the market is shifting to the upside. So this right here, you go from your info line, which is a very useful tool, to just kind of get an idea of how much you could potentially make. And my best advice is to just assume you entered right below this candle's low, and then exit above the short-term high, this one, halfway between these two wicks is a gap. That's a partial. Halfway between this wick and this wick. And what do I mean by that, just in case you're asking? You just take your fib, you just take it to the wick of this one, and take halfway between that. That's your target. And you can do the same thing here. It's upside down. Not really, but that's partial right here at the 0.5 level, and then ultimately it would just take out the short-term high, and then you would just take halfway between these wicks. All partials right there, and then eventually it just gets to the point where you're on your last contract, which would be in this fair value gap. And then if you wanted to hold to see if it would take the short-term high out, that's okay, because you pretty much took off everything off the table, and you don't really care if it comes back and stops you up. So we have quite a bit of opportunity. I personally am very interested in these highs being taken out and then reaching up in here. That's just what I think it's going for. It doesn't mean it's going to happen. I just expect that. So that also increases the confidence that the marketplace is probably going to accelerate to the upside. And it's probably going to be easy for you to make money over a long period of time with this, especially when you see all this information in front of you and you just take the time to analyze it, because you have to realize that just because you trade on a daily time frame does not mean that you are stuck in one time frame. Like, if you really wanted to trade this market and you were waiting for a long-term opportunity to get in the marketplace, you can do that. You're going to have to be really patient and deal with periods of, your profit and loss may come back on you a little bit, and what you saw today as a profit may not be the same every week. Like, you may not make any money that week because you're waiting for a long-term movement. So what I'm talking about right here is you have a price leg that moves higher here. So this is a monthly change in the state of delivery. So when we take out that short-term high, we're basically accumulating long positions in this fair value gap right here. And you can also see that we have an order block right here, all these down close candles, and look what's forming inside of that order block. Propulsion candles. And notice how it never came down to the body of these down close candle. It only came to the wick. That's because it's a monthly time frame. That's why that happens. Can it come down there and touch it? Yeah, but it usually just propels price higher. And then you also have another series of down close candles. It's just more opportunity for you to get long into this market. But if you're really just trying to capture lows, nice longer term lows, and you're trading on a monthly time frame, you can do that. You're just going to be a little bit nervous, especially if you're new doing that. And we are talking really just amazing profitable trades that can just, oh, you'd be amazed at how wonderful they are. So we're going to take all the way up here, and I'm just showing you for example purposes. These are just for your studies. So right to that wick right there, that's snapped right on there. And like I said, you can go in your charts and do this yourself. So $6,583 bars, or not bars, points of movement is what this is giving you, and then you would just take that times by 5, because each point is $5. So do the math on that, and you tell me if that's going to put food on the table. So I'm going to leave it at that. That's all I got to talk about. That's just a quick little walkthrough of what I see, and hopefully you found that